Hey everybody, this is Roger with Roger's Reviews, and I just listened to a very good video on Hyperchange, and it's all about Bitcoin. And if you guys don't understand Bitcoin or kind of skeptical about it, this is a very good video. Or if you want to show somebody or explain something, explain Bitcoin to somebody. I was trying to explain it to my mom the other night, and I couldn't quite grasp it to get her to understand it. So I'm just going to play this video and kind of talk about it a little bit. I'm not going to play the whole thing, but there's now multimillionaires and billionaires putting huge amounts of money into Bitcoin. And I think it actually now is basically turned the corner. And as you know, if you've been keeping track of Bitcoin, it went from 20,000 to 30,000 a week. It took 12 years to get to 20,000 in 7 days. So I think the way the monetary system works and the way our money is deflating, this is a really good safe haven. So I'm gonna go ahead and play this, and if you get a chance, watch the whole thing.
Hyperchange, welcome to another episode. Today we have a really fascinating discussion lined up about Bitcoin. We have Michael Saylor on the line. Michael, welcome to Hyperchange.
Happy to be here.
Yeah, so you are going to go down as either one of the most crazy geniuses of all time, or just someone that was totally crazy with the recent move you've made by putting a huge amount of your company's cash, instead of holding it as cash, moving it in essentially Bitcoin. And this is following a move that I think Square did that, but you put a huge amount of your cash into it. And I thought this was a fascinating move that is potentially, leading to a very ahead of the curve thing that many, many companies might start doing. And so I'm curious if you could give us a little bit of background on what the company is that you run and how you decided to put a bunch of your cash into Bitcoin.
Sure. Well, I run an enterprise software company. I started it in 1989. I took it public in 1998. We sell business intelligence software to big banks, governments, retailers, organizations everywhere on earth. About 27 different subsidiaries. And we grow like, it's stable. We grow 5% a year. It's not like a 20, 40, 50% hyper growth company at this point. It's fairly mature, well run. We generate a lot of cash flow. And when we came into the year 2020, we had like $600 million in cash. And we were generating some cash, and we were saving our money for a rainy day. And we tried to be conservative. We bought back hundreds of millions of dollars of our stock, and we were investing the rest in short-term treasuries. And I remember when short-term treasuries used to yield 5%, and we would have been getting 30, 40 million a year. And it felt like, okay, responsible. And then the Fed just systematically cranked down the interest rates until it got to zero. And then we realized that, well, the cash generates nothing. And then the investors successfully told us they didn't value the cash as anything. Their view was it's just a lump of lead on the balance sheet. And the company it's almost like a liability. Like your cash is a liability. You either need to buy the stock back or give it to us as a dividend to get any credit for it. So we got to March and we thought, well, we have a lot of treasury cash for a rainy day. And then the rainy day came and it was pandemic. And when the pandemic hit, we actually found that everybody wanted the software. The software business is better than ever because we're just selling software to big enterprises and the like. But our costs decreased because now we couldn't do marketing events and we couldn't travel, we couldn't stay in hotels, we couldn't go on airlines. And so the company went from having a lot of cash and generating a bit of cash to having a lot of cash and generating a lot of cash. And simultaneously, we saw all these financial assets have a V-shaped recovery. And then we saw Main Street have a K-shaped recovery, the famous K-shaped recovery where restaurants and airlines and hotels and amusement parks and theaters don't seem to be coming back. And yet all of these stocks and bonds are shooting through the roof. So on one hand, I realized I have a lot of cash. On the other hand, I realized I was going to generate a lot of cash. And then I realized it was worthless. And I realized it was worthless because the monetary expansion rate went from about 5% a year to 15% a year. And we actually expanded the money supply by 24% a year in the US this year. So everybody knows about money printing and all the stimulus. Well, I went from not caring to thinking, well, we'll save the cash, get a yield on it, and figure out what to do with it, to realizing that we're going to lose about 15% of our purchasing power every year for the next 4 to 5 years. And so a block of 500 million in cash looks like a melting ice cube.
Nice.
And it felt like highly certain that we were going to lose half of that money in 36 to 48 months if we did nothing. And so we arrived at the Bitcoin investment when we realized that cash is a liability, not an asset. We have to invest in something that will beat the cost of capital. The cost of capital is the rate of M2 monetary expansion. It's the rate at which the currency is losing purchasing power. And so if the currency is losing purchasing power at 15% a year, then we're all going to lose half of our wealth in 36 to 48 months.
And this is a key part of the thesis. Yeah, and then I wanted to just dive a little deeper here. So why aren't we seeing inflation of prices go up that much? Maybe we are in equity assets, but I'm curious of like, you know, a lot of people would be like, okay, well, why is there no inflation? But you're saying pricing power goes down 15%. Can you help us break that down a little?
Yeah, because inflation is it's a defective idea. There is inflation. There's inflation in everything that you want to buy. It's just not tracked by the Fed. For example, Hampton's real estate is up 50% in 16 weeks. How is it not inflation when the beach house you wanted in the Hamptons is 40% or 50% more expensive in 3 months? And there's inflation in assets. There's inflation in bonds. There's inflation in stocks. There's inflation in real estate. There's inflation in gold. There's inflation in scarce art. There's inflation in everything scarce. There's inflation in, by the way, the inflation measure that the central bank tracks is a market basket of consumer goods and services that do not include the highly volatile food and energy. By the way, they don't include food, energy, and assets.
Right.
So you tell me, in what universe do you live in that you can live without food, energy, or assets? If you want to watch streaming Netflix or YouTube videos for the rest of your life, then there's no inflation. So what's going on right now is that the popular media, mainstream media, and the central banks, they're making a lot of noise about no inflation, and they're lamenting the lack of inflation, and that's the excuse to lower the interest rates and print money. But the point is, why in the world would you actually be
And I think right now the reason why they're doing this, basically, I think secretively, this is just my speculation, that big banks, insurance companies, huge corporations are slowly buying Bitcoin, and that's why it's spiking. And they're basically eventually going to have more and more of their assets, or their cash, tied up in Bitcoin. Because anybody, you know that all the billionaires, all the billionaires are catching on this. They know what's going to happen, but they don't want everybody just to put their money in there, because it's just like a stock. The more people that put money in there, the higher it goes. So if they slowly increase their portfolio and put more of their portfolio into Bitcoin, the cheaper it'll be. So they want to get their position first.
concerned about the rate of inflation of a market basket of things you don't need? Right? The inflation rate that you should be concerned about is the inflation rate of food, energy, and assets. And if you were to take, say, the inflation rate of bonds, the 10-year bond was yielding 250 basis points about a year and a half ago, and then it was yielding 50 basis points, which means it went up from $2 million to $10 million in 12 months. So how is that not inflation? It's hyperinflation of assets. Yeah, it's just that people have defined a metric which is meaningless, and so it's inflation is a vector, Galileo. It's not a scalar. It's not one number. I can calculate the inflation rate of assets, food, energy, real estate in the Hamptons, beachfront property in the Florida Gold Coast, or I can calculate the inflation rate of streaming YouTube videos. And streaming YouTube videos are